price of gold has doubled and miners have gone through the roof. Now, some people are wondering if this rise has gone too far. Even though they say there are no stupid questions, I still believe these people need to be calmed down. Wow, what a week for gold and silver. Gold went up above $4,300 for a while. It needs a lot of work still. While I agree with you, let's start with what a big fund manager, Evie Hambro from BlackRock, has to say. Gold could go a lot higher. By the way, Hambro is a great name. He is giving his hot take on the gold price in terms of both supplier stocks and the metal itself. Because he works for BlackRock and does a lot with supplier stocks, that's what he'll be interested in. But this is where things get interesting. He's talking about producers, because gold and mining stocks have been on such a big run that some people think gold might be too expensive. But is it? Oh no, Hambro says. He says that those makers are just making too much money, which is not the same thing. The models that are used to figure out how much the makers are worth still use gold prices that are a long way below spot. In other words, the gaps are crazy. Silver is also going through other changes. Many people think silver is too expensive right now because there isn't enough to go around. This makes the lease market tight. In the long run, though, that probably doesn't have much to do with this price trend. All of this is just to say that the part as a whole might be worth less than it really is. We didn't spend much time on the beginning. We went right into it. The question is whether gold and silver are both too expensive. Gold and silver are what we talk about most of the time. But right now, both the metals and the miners are on big runs. So far this year, the GDX is up 131%. The GDXJ is up 142%. You thought gold's run was crazy? That's nothing compared to this. It gets even stranger on the funding market. Some people, like Avi Hambro, say that it looks like that's actually falling behind. So let's not jump the gun and believe what someone says. First, we need to make sure that the thought that gold is overpriced is true. It could be because that changes the way we do everything. You get rewarded early for being patient and consistent in a bull market, but you get rewarded late for being disciplined. You want to know where you stand in the loop. Gold costs more than twice as much now, at $4,200, as it did in 2020. It's likely that we all know that. Can it buy twice as much, though? It might be overpriced if it could buy twice as much as it did back then. To be honest, I wouldn't say that, because gold isn't just used to buy everyday things. But let's make a few quick similarities anyway. That means that until last year, the Ford F-150 was the most popular car in the US. And I've looked at the price of cars compared to gold prices before and shown that gold prices have gone up faster than car prices. But how much? The Ford F-150's base price has gone from $28,745 to $39,330, which is just under 40% more than it was in 2020. Today, I doubt you'd be able to find an F-150 for less than $40,000. That's a 40% price rise in 5 years, though. During the same time period, gold has gone up by more than 147%. So the price of a Ford F-150 went up by 40%, and the price of gold went up by 147%. Hammer says that gold won't buy more trucks at the price it is now in that talk from Tuesday. The math has been done. He's not right, though. There are a lot more trucks you can buy. If you can buy one more truck, does that mean gold is too expensive? From my point of view, this is where the discussion about value really goes off the rails. If you only look at how much gold costs in dollars, you miss all the present events and reasons why people, institutions, and central banks are buying more of it. It's everyday things like food and cars that gold can buy more of this year. The only thing that comes to mind is maybe silver. Besides those two metals, though, gold has been doing better than the stock market for a long time now. It's doing better than Bitcoin and faster than inflation and the cost of things going up. There is no doubt about it. The total amount we spend hasn't gone up by 147%. I'd also like to lower the price per unit by adding some 10th ounce coins here. Some reports say that the prices of everyday things are going up by a few percent, but if you think that gold will follow suit, you're probably not giving it credit for the current run it's on. It's not as easy as saying that the rise in gold equals the fall in the value of the dollar. To get that kind of balance, you need to look at things like Manhattan real estate. Now, I don't know much about it, but Hambro talks about it later in the hearing. I'll also admit that the gains in a few non-essential investments have probably been higher than the gains in gold. In this case, prices change over time. Where are we in this? It would mean that we're late in the cycle if gold was overpriced. In my last film, I talked about how gold bull markets used to last for 8 to 10 years. We are now in the 7th year. I also said that Bank of America raised their price prediction for 2026 to $5,000, and at $4,200 today, even that seems low. Let's be very clear about this. I don't see any signs that gold prices will go down or that this long-term trend will end. Based on how long the last few bull markets were, it looks like we still have a year or two to go. However, we're only looking at 2.5 bull cycles as a standard. There aren't many of them too. What matters is that we'll see signs of a top when we get there, but they haven't really shown up yet. This is not the end of the cycle. They end with too much joy and recklessness. Most of the time, those signs are pretty clear. Eddie, your cousin, calls to tell you that he's selling his RV to go all in. The market moves in waves. The first wave is doubt. People would just drop into the comments to make fun of whatever I was talking about. I saw a lot of that when I first started this channel. Gold makes a lot of noise. The second is having faith. It's becoming clear to some. I believe 2024 was the year we really got there. There is also a third wave of belief. Well, we're just now getting to that stage. It's the big one. ETFs are getting new money again. The government is buying. This means that demand is going up in both stores and businesses. There aren't any strong signs that this run is about to end, unless something very important happens, like a big change in policy or a complete restart of the economy. The research actually shows that it's still early. Okay, the next part is paid for. I already talked about how the gold mining business has grown this year. An ETF from VanEck called GDX has gained 131% this year. Their junior miners ETF, GDXJ, is up 142%. That's the case as of October 16th. This company, Gold Mining Inc., is traded on the New York Stock Exchange under the ticker code GLDG. VanEck, Ruffer, Goldman Sachs, and Sprott all have shares in it. This one is different. Gold Mining Inc. is a company that looks for gold. It has more than 10 projects in the Americas, and it also has big stakes in gold companies that are publicly traded. That means that you can be exposed to more triggers and the price of gold at the same time. It is worth about $332 million right now, according to October 14th. That's a 110% rise so far in 2025. But its stock collection and cash on hand are worth about $236 million on their own. Based on the prices at the end of the day on October 14th, 2025, we can see that their shares in USGO, GROI, NAU.V, and AUZ.AX are worth about $231 million. And that's before adding any value to its exploration stage gold projects across the Americas or the possible value of its uranium project in Canada's Athabasca Basin, which is one of the world's highest grade areas. The business also doesn't owe any money. Gold Mining Inc. has shares in 4 companies. So far, in 2025, 2 of them have almost tripled in value. The company also owns one of the biggest portfolios of gold and gold-copper resource stage minerals in the Americas. There are more than 10 projects in Canada, the United States, Brazil, Colombia, and Peru that are in places that allow mining. They have about 12.4 million ounces of gold equivalent that have been measured and identified, and another 9.1 million ounces of gold equivalent that have been inferred. The Gold Mining Inc. has said it wants to move 4 important projects forward. The São Jorge project in Brazil is the most important one. In May 2025, the company started its biggest project to date for research. This project has an open pit resource of about 1 gram per ton and has room for growth in the area. It is on a 46,000 hectare piece of land. Gold Mining Inc.'s projects include large-scale gold and gold-copper projects that are getting harder to find in places that are friendly to mine. And if these projects have gone well, they will give the big operators what they need to replace the reserves that are being used up in output. Now, it's important to aim for resource growth because those big producers are quickly using up supplies. These are projects that are located in safe areas, have good infrastructure, and are run by a team of people who have a lot of experience building value over time. Gold Mining's heads are mining veterans, such as former Goldcorp, CEO David Garofalo and Amir Adnani, who has started many businesses. They are both chairs of the group. Insiders own more than 10 million shares, which shows that they are very much in line with owners. Gold Mining Inc. is a company that has exposure to the price of gold, a pipeline of growth projects, and interesting institutional and insider backing that you should look into more if you want to get exposure to gold. As always, you should read Gold Mining's public papers to find out important things about the company and its projects. That includes the most recent yearly information form and any technical reports that are linked to in it. You can get all of those at cedarplus.ca. Finally, let's get back to the main topic of people wondering if gold is too expensive. From my point of view, cycles don't end when people doubt them. They are over when everyone is having a good time. Some doubt means we're probably just getting used to what's going on. You can call it a casual comment if you want. We're in the middle of the cycle right now. Bank of America says that gold will be worth $5,000 in 2026. This is based on a lot more research than just a passing observation or a gut feeling about how expensive gold feels. Also, it should really feel pricey. Since January 2024, the price has gone up by over 100%. But, as Evie Hambro says, that doesn't mean it can't go up even more. That's it, let's end it. Tell us what you think. Is gold too pricey? Perhaps even $5,000 or more in this cycle, this super cycle, as we're calling it. Do you think it can go higher? Tell us. When you're done reading, please click the like button below if any of this got your attention. If you want to hear more about this subject, make sure you're subscribed and that alerts are turned on. Thanks again for watching if you're still here. Thanks for your time every time. Be careful.